And we put it all together, and we have a really, really simplistic, simple-looking chart. I say simplistic and simple, and I know it's not. Nothing in trading is simple. But let's see if we pass the test here when we put it all together. Red lines mean what? Just tell me bullish or bearish. Red lines on the, we're talking about the active fractals. Let's get some participation here so I know everybody's listening, because we have to make sure we get past this to move on. All right, right. Red lines is bearish. All right. Red moving average crossover, is that bullish or bearish? Long or short? Our intermediate term trend. All right. So far, so good. We know red lines mean short. We know crossover means short. Red candlestick colors in general. Red candlestick colors. Red candlestick colors. Right, right, right. And finally, the delta cross. When the delta cross crosses to the downside, we're bearish. So let's just talk about this. So we start getting red fractals. We start getting moving average crossover to the downside. We start getting red candles. We're short. Moving average crossover on this delta down here at the bottom is also crossover. We see the MACD get above this zero line right here. Not a true MACD, MACD of the delta. What happens? You get a little bit of a bounce in your price. You actually get a reset. That's what we call it. It's a reset. You actually would have a new signal form right here if I had the signal tool turned on. And then the market continues down. So the mid-round, there was a little sway and momentum mid-round here. You got a little climb in price action. But yeah, that is basically it. So looking at this chart, and we're very proud of this, I will tell you, looking at this chart, would you agree that this is a nice, clean-looking chart? There's no time involved here. There's a time axis across the bottom, just to let you know what time of day it is, but it has nothing to do with the candle or bar formation. Those bars are only formed when you get price action movement. So this is tracking true price action swings in a very clean, concise manner, and I've talked you through our trend identification mechanisms. The active fractals, the moving average cross, the short-term candle colors, and the delta cross. That is the basis of everything we do with our fractal swing tool. That is it. Now, everything else is just filters and iterations. All the signals are derived off of this information. Everything comes off of this information. The Rico bars do not disappear. Danny, you must have been a little bit late joining us. That's why I developed these bars. These are offset bars that open at the mid-wrinkle. They're my own designed. We programmed them. They have wicks on them, unlike a regular Rico bar. And no, they don't disappear. That's the beauty of these bars. You only get a bar when the price action moves. You never get the disappearing. You get wicks on the rotations, and we offset the bar. It's called an MT Rico, and you can get this bar for free. Just go over to Newbie-Trader.com, sign up for that newsletter, and I give that bar away for you. There's sites out there that charge about $400 for this bar. You can have it free. I needed it for developing my tool, and I give it to you for spending some time on my site. You can have it. All right, so we talk about the three signal tools that come along with this. I'm going to pick up the pace a little bit now, just so we don't stay on here too long tonight. But there are basically three entry signals. We have the conservative signal, the aggressive signal, and the alternative signal. And there are 8 trailing stop techniques built into this tool. You can use all 8. You can turn 4 on. You can turn 2 on. This tool is completely customizable. We ship it out of the box, set up with 3 high probability setups, one for each different entry type setting, with the proper trailing stop techniques and filters already established. But just like any race car, for any of these, I'm in the Charlotte, North Carolina area, but the NASCAR is real big down here. And just how you have all these race machines, that race cars, they go out and race on the weekends. Well, they all get under the hood and adjust and do things to adjust the car to make it go faster, right? Same thing with this. I have a real nice, souped-up, high-powered race car that we deliver to you, but we allow you to get under the hood and adjust it because we know not everybody has the same risk tolerance, not everybody has the same account size, and not everybody has the same appetite for risk. So we make it flexible so you can actually adjust the tool to your liking. It's all based on extremely high probability trading. You can see we're looking at multiple time frames. We're looking at true bid-ask price action, the true force in the battle between the bulls and the bear, and we're looking at true swings and identifying it with, you know, some of the oldest Dow theory there is out there. Very simple moving average. I mean, we are putting a lot of technology, but it's all very sound, technical, high probability trading techniques that go into this tool. All the templates are pre-designed. Like I said, we have 3 different entry techniques. I'm going to talk about all the markets. We trade, obviously, the ES, but I have up to 12 different future markets, everything from gold to crude to the euro to the Russell. So we have 12 different markets with 3 different types of entries on each market. So I go ahead and provide you with 36 pre-designed templates set up in a very probability trading fashion. And what I haven't shown you yet is the actual auto signals that it generates. We let the computer do the work. The computer provides you with the exact entry, the initial stop, and a trailing stop. We talked about the 5 newbie trading mistakes, and a lot of it had to do with trade management, with the entry levels, stops, trailing stops, and taking profits. We take care of all that for you, and we discuss it in great detail in our training. And the tool itself only signals trades when it's of the highest probability nature on the conservative and aggressive settings. The alternative will show you every signal, and there are a few rules that you need to apply to the alternative settings. But there's really 2 rules you have to apply, and it's very easy to understand once you identify and understand how this tool works. And we take you all the way through that. Fully customizable, lets you get in there, change it like you want. And here are the markets that we cover. We cover the S&P E-mini, the ES, the YM, which some of you said you trade, the NASDAQ and the Russell. We have crude oil covered there. We also have natural gas. We have corn and soybeans. We also do the Euro futures and the FTSE, gold, and high-grade copper. So between those 12 markets at any given time, one of those markets is moving and giving you an opportunity to trade. We don't suggest you trade all 12 markets. We just know that different people have different markets they like to trade. And by doing this spread of markets, we've covered the indexes, we've covered the, you know, the oil markets and gas, you know, the metals, the futures, and, you know, the grains. So we feel between the grains and the oils and futures and indexes and the metals, you have enough of a variety to do what you need to do. You know, it's whatever you prefer, Manelli, to trade. My markets that I watch more than anything would be the S&P, crude oil, and the Russell. But if I'm up early in the morning, I'll watch the euro. If you know, sometimes I'll trade gold, NASDAQ. You know, but I like to watch about 3 markets at any given time, and I would not because of anything other than I know the ES very, very well, and that's where I spend my day over at the E-mini Junkie in the trading room. Is predominantly that, and we'll talk about that a little more. But I like crude, and I like the Russell. I like the NASDAQ. I like it. Once you learn how to trade, it doesn't really matter because the signals, they come up and they're either there or they're not. Another thing we do in this tool is we provide a little chop warning signal because this is a swing fractal signal tool, and we are trying to capture a swing move, but there are times where the market gets in chop, so we have a built-in mechanism that identifies when there is chop. And we can trade chop, and we do trade chop. We just have different techniques we use for that. and we cover that over at E-mini Junkie. But that the markets do chop quite a bit, so it's advantageous for you to understand how to trade chop. So here's an example of the actual signal with the trails on it. Now, this is from a couple of weeks ago, and we can go to some live charts here towards the end. But the signal are these three green arrows pointing to the right, for instance, here. I have a big magenta-colored circle on my chart. That magenta-colored circle is not the indicator. That's something I put there just so you can see where I was pointing. The indicator is the three green arrows. That's the entry. And then this magenta-colored line underneath, that is the trailing stop. And the way we set it up, like I said, there's 8 trailing stops. And the templates I provide you, I might have 5 or 6 of them turned on depending on the market. But it keeps track of all the 5 or 6 different trailing stops you're using, and it adjusts accordingly. And this one obviously got stopped out up here. And the way that I keep my chart set typically is I have that set to a white color. I have it turned in, I turned it to magenta just so it'd be easier to see for the presentation purposes. But what I want you to concentrate on is the area that I have marked that is a valid long signal, and we take our first and secondary targets, and then this trail is for the third contract. So this would be an example of a long, right? We shift from red, cross over to green, our deltas cross up, we wait for everything to be in alignment, we get a signal, and this is part of an alternative entry that I'm showing here. This is an alternative entry on the ES going long. The aggressive and conservative entries are based purely on these fractal rotations and price action. So that'd be an example of the ES. Here would be an example of crude oil. You have a short in crude. This is a short to long transition in crude. Your trailing stop comes down. Your candles rotate through your colors. You finally get green. Here you get a long signal. You push up, and you can see the trail follow the market up, and then we stop out. So some of the things we want to look at here. When you're going short, again, you got the red crossover in your cloud. You have red candles. You have red lines. Your delta is crossed to the downside. When they cross up and they turn green, you get crossed to the upside, green candles, green fractals, green cloud. So it's really, we try to make it as visually aesthetic as possible to know whether you should be long or short. And then we throw the signal in there to tell you exactly where to get in. And then you have your trailing stop, and you know exactly where to keep your stop. So a lot of the trade management is taken care of for you, and we color code it in such a way. And again, if you have red, green color blindness, you can change the color of these candles. They don't have to be reds, yellows, and greens. You can make them blues, magentas, and whatever. The fractal lines, they might have to stay the color, but you can tell when the lines are on top, they're moving down, and when they're on bottom, they're moving up. And here would be a short or a long to short transition on the Russell. Again, you have signals. You had a rotation in your fractal here, so you had another signal long. You transitions from green into red. You get a signal short. You pull back through your gold line. You get a secondary entry short. You can see the various trailing stops. And this is across a couple of days. This is one day. This is the overnight section that I have kind of grayed out here. And then this is the beginning of the next day. So price action isn't time dependent. The price moves, and when it moves, that's when you get the candle. It has nothing to do with price action. It's pure, or I'm sorry, it has nothing to do with the time. It has everything to do with price action, and we believe price is key, and we trade off price action, and we have very specific signals and things we do and make this extremely high probability trading. So another thing we have built into the tool, I don't know how many of you are familiar with this as far as Ninja, but they have what is called a market analyzer. It basically takes your charts and puts it into spreadsheet format. What that allows you to do, look at multiple markets at once. If you want to concentrate on, say, watching the ES, you can have this market analyzer running, and you can be watching for other setups in all their markets. The way that we programmed it is very basic. We have a column for our active fractals, so you can quickly look and see whether you got a bullish move or a bearish move from a fractal standpoint, whether there's a trade setup pending, or whether you're actually in a trade long or short, where the pullback is, price actions, your trade trigger, your stop. And the only thing I'm going to want to warn you about, we have 6 pre-built templates that we provide you, so it's already programmed. But if any of you are familiar with Market Analyzer, I think it's a great tool, but you better have the horsepower to run it. And what I mean by that is it's very labor intensive. Basically, think of each one of these columns as a chart, and think of each one of the rows as a chart. So if you're analyzing 4 different rows across 5 different columns, that'd be the equivalent of having about 20 charts opened on your computer from a data analysis standpoint. So it takes a lot of horsepower to do that. If you have a high-powered computer, no problem. I mean, you go out and buy a nice gaming computer that you run for your trading software, you can handle this. But when I'm running my room and running my charts and projecting and speaking, I only like to have about 2 or 3 other markets that I'm watching at a time. But it's a great tool. It's just a little computer intensive. But we provide you with 6 templates there, so you can watch multiple markets. And that's pretty much it on the tool. So I want to talk to you a little bit about technique versus style. And most newbie traders have this exactly backwards. Most newbie traders will trade probably about 10% technique and 90% feel or style. And that's exactly opposite of what you should be doing. You should have a system, a trading plan, an approach to the market where you're doing the same thing every day, and you should be pretty much robotic by how you approach the market. I don't want you to be a robot, because I think you can outperform robots. But I think you should be robotic in your approach, and then spend your time doing analysis on the market and apply that analysis to your trading system. So I think 85% to 90% should be based in a solid system, and only let your feel or style come into it 10 to 15% of the time. Excuse me. Trading should be boring. You will be spending a lot of your time waiting for the setup. That's the way that trading should be approached. You need to have a reason for the trade. You shouldn't invent a reason for the trade. Your system should tell you when to take action. And I want you only to trade when you have pure signals. Excuse me, let me take a quick drink. Just like an infant, I think we should learn to crawl before we walk, and we should learn to walk before we run. We need to be able to trade 1 or 2 markets with 1 or 2 contracts, and then when you start having success as proof in your equity, then you can add a new market. Then you can add a new contract, and then you can grow up. And there's a lot of brokerage firms out there that will take your money and let you trade down to $500 a contract. That is just absolutely insane. You can't trade in that far undercapitalized. I personally suggest you go with about $5,000 per contract. And when you get up to $10,000, you add your second contract. Because if you have, say, a $15,000 to $25,000 account and you're trading 2 or 3 contracts, you have more patience to let the trade work and to let your true stops be there and not take trades maybe that you shouldn't trade, and it will help keep your stress level down. So I think you should only trade 1 or 2 markets, and then after some bit of time, just like, you know, riding a bike or anything else, you learn how to do it to where you don't even think about it. Then you can add that 3rd chart or 4th chart and start looking at, you know, maybe 3 or 4 markets. That's probably about where you should end, 4, maybe 5 markets depending on your expertise. But and same thing with the amount of contracts traded per. You only earn the right to move up in contract position size as your account grows. Now, this system works best in multiples of 3. I prefer you have the ability to take a first and secondary target and then have a runner. Now, that runner is going to get stopped out probably 60% of the time for break even, but when you do get the opportunity for it to run 25, 30, 40% of the time, it really pays dividends, especially in markets like crude and gold and that can really take off. Those runners can really make your week. You know, you get the singles and doubles, singles and doubles, singles and doubles like we talked about, but occasionally you'll hit that home run with a runner. And you want to be able to have a trade that can sit there and work, and if it gets stopped out for break even, it's no harm, no foul. You kind of expect that. But when it does take off, it'll pay you, you know, it can pay you quite nicely. But you have to earn the right to get there. And just because we say you trade in 3s, you know, it doesn't have to be 3 contracts. That could be 3, 6, 9, 12, any multiple thereof. We just suggest that you think about having an account $5,000 per contract traded. So let's talk a little bit more about this tool. It will provide you with an objective reason to trade. We talk about the 5, you know, newbie trading mistakes. The tool will take care of that for you. It only provides you objective reasons. It has definitive stops. You go into every order, you know exactly where your initial stop is, and you adhere to that. You won't let your losers run. There's a complete trade management system. We tell you where to take your first target, where to take your second target, how to trail the third. So we give you the trade management that is lacking in so many newbie traders' plans. By having a tool do the work for you, it naturally provides you with an atmosphere of patience and instills discipline. And it provides you a structure to where you can't revenge or overtrade. Now, I shouldn't say you can't, because you can always press the button and do anything you want. But the tool is not going to force you to overtrade. The tool is only going to give you signals that are valid and high probable and meet all of our criteria from a longer-term standpoint when we get the fractal rotations, to the intermediate-term trends, to the short-term setups. And it's only going to do it when your candles meet the right, you know, the colors over multiple time frames, etc. So it is providing you with a structure that will cure all 5 of those trading mistakes that we talked about that is so prevalent among newbie traders if you take the time to implement and learn the system. So I want you to refuse to become a statistic.